Hello everybody and welcome back. In this video I want to show you my favorite defensive plays in this market. If you think the stocks are too expensive, if you think the S&P 500, the Nasdaq are at an all-time highs or near all-time highs, and you don't want to touch the high-flying tech names, you doubt there is an AI bubble. If you want to play defense, here are my favorite names. This is what we are going to talk about. I am invested in some of these defensive names. So I'm literally walking the talk here because this is exactly what I am doing to play defensive in this market. And yeah, you will see that these picks are still high quality compounders. The goal is not to sacrifice the quality of your picks. The goal is to still outperform the market in the long term, right? If you're watching this channel, you want to outperform the market. But when markets are high and expensive like this, sometimes it's good to have some hedges, some defensive plays in your portfolio, just in case something bad happens. Anything can happen. Nobody can predict the future, but maybe we will have a recession. Maybe you will have a correction in this market. Maybe you will have some other panic attack with some new tariffs or new external things that nobody is thinking about right now. In case you have a shock in this market, especially since the markets are overvalued, you want to be protected. So I'm making this video just to show you how to play defensive in this market. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. So I have built my track record by outperforming the market when stocks went up and by outperforming the market when stocks went down. In 2022, when everybody lost 20%, I lost 5%. So the rebound was much faster the year after this, in 2023, because I had some hedges, some defensive plays in my portfolio. So now what do we know about the current market? If you want to have some defensive plays right now, you have to assess the situation right now. In late 2025, what is the market like? We have an expensive market. Some people say we are in an AI bubble. You have immense capex from the hyperscalers. You have a lot of demand for AI, and this is changing the world. ChatGPT is only 3 years old, so we are quite early in this cycle. I don't think we are in an AI bubble. I think AI will change the world, and I think this is quite new because 2 years ago we did not have such improvements in business models. But now everybody is integrating AI and investing massively. Will it turn out okay or not? Nobody knows. At the same time, you have interest rates that are dropping a little bit, but you will have deceleration. You have the job market that is weakening in the US, which means employment is going up. And if you have this situation and interest rates are going down, at the same time, Japan is doing some stimulus package. At the same time, the US is thinking of starting quantitative easing again and giving paychecks of $2,000 to people. You have some pressures of inflation right now. My guess, my opinion is inflation will come back. Maybe I will be right, maybe I will be wrong, but this is my video after all. So I will tell you what I think are the best effective plays if you think like me. If you think earnings are still fine, you will have some capex that will continue to increase in the future. The US consumer sentiment is low, but the consumers are doing fine. You have a K-shaped economy, which means rich guys are getting better, poor guys are getting worse, and you will have inflation that will hit the middle class and lower class. How do you play defensive in this market? Well, first of all, if you think anything can happen in this market, in case we have a recession, you want to completely avoid companies with a lot of debt. Most of the time, almost all the time, companies that go bankrupt are companies filled with debt. So in case we have a recession, in case we have a shock to the economy and something bad happens, the companies that will go bankrupt will be the companies with a lot of leverage. So if you reverse engineer this, First of all, a defensive play should not have a debt problem. You should have either no debt or minimal debt that you can repay very easily. Second point, in case you have a problem in the world, you want to avoid companies that are not profitable. Okay? So unprofitable companies have suffered immensely in 2022. Sometimes stocks go down. When it happens, unprofitable companies have their stocks that go down much more than this. So again, if you reverse engineer, you want to only focus on companies that are profitable and growing. Okay, so growing profitably. Third thing, you want to avoid companies with this AI capex boom, because now maybe something will shock the world and the AI thing is a bubble. What if it is a bubble? I don't think it's a bubble, but what if I'm wrong? Maybe it's a bubble, maybe everything will crash in 2026. Anything can happen actually. If it happens, you don't want to touch companies that are linked with this AI bubble. I'm talking about the defensive plays, right? Not the whole portfolio. For the defensive plays, you want something that is not related at all to the AI boom, okay? I'm only talking specifically about defensive plays. No debt problem, meaningfully profitable, and no AI theme, okay? You start to eliminate many companies. Additionally, if you want a defensive play, you want to avoid things that are expensive with very high valuations, like a PE ratio of 40, 50, 60. You want to avoid this. You want something that is reasonably priced or a little bit cheap. Reasonably priced is fine. Also, you want to have defensive plays that have been defensive in the past. What is great is the internet is free. So you can backtest everything you want. You can backtest companies and what their stock did for the past crashes. And I can start with the first example. Berkshire Hathaway. Boring play, I know, but it's a defensive play. The company of Warren Buffett. It's the best retirement stock for anyone who wants to put money in this market and do something else with their life. If you want to buy something and go to sleep, go to hibernation, please do so with Berkshire Hathaway. This is not financial advice, but it is what I would recommend my family does. So yeah, every time stocks dropped and we had a major crash in the economy, Berkshire Hathaway was resilient. And now Berkshire Hathaway is increasing its cash pile. So actually, they will benefit from a crash in the economy. If stocks crash, Berkshire Hathaway will use all its dry powder to invest meaningful amount of capital. They have, $300 billion of cash. Some of it is float, some of it is real cash, but they still have a lot of cash. Actually, a market crash will improve the quality of their business. So, Berkshire Hathaway is a defensive play that will benefit. And if you look at how the stock reacted in the last market correction, it was in 2022, right? So between January 2022 and December 2022, here is how Berkshire Hathaway's stock reacted. I'm on this website, wonderful website called Stock Unlock. If you want to use this website, you have a discount code in my description. Let's see. In green, you have Berkshire Hathaway, the stock of Berkshire Hathaway. In gray, you have the market index, the S&P 500. What you can see is for all of 2022, the green line was always above the gray line, which means for 2022, Berkshire Hathaway has outperformed the index every month of the year. When you have a tech drawdown, when you have major tech companies crashing in the stock market, Berkshire Hathaway is fine. Now people have worries about an AI bubble. Who do you think will crash? What kind of stocks will crash more? Tech-oriented companies, of course. AI-oriented companies. Berkshire Hathaway is not AI at all. So they will survive and do better than the index. What is this performance? Since January 20th to end of December, Berkshire Hathaway had a performance of, you can see here, in in green, minus 1.62%, compared to the S&P 500, minus 15%. This is not the whole year, but you get my point, okay? And now, if you can look at the same performance for the latest market correction in April of this year. When Trump introduced new tariffs, the market dropped 18%, by 18%, and Berkshire Hathaway stock went up, flat or up. So when you have a lot of panic, this is a safe haven. Berkshire Hathaway is a safe haven. And in case you want to protect your portfolio right now, actually, a wonderful hedge is Berkshire Hathaway. Because when stocks are crashing, tech stocks will be crashing much more, and Berkshire Hathaway will be stable or thriving, maybe, but they will do better than the index. So I wanted to start the video by this. This is the most simple hedge and defensive play you can have in this market when you think everything is expensive and overvalued. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Next point is, you have good companies also that fit this criteria. You have Visa and MasterCard. They don't have any debt problem. They are growing, they are profitable, and even in 2022, their revenue increased, their earnings increased, the margins increased. Nothing can disrupt Visa and MasterCard. They are not linked to the AI bubble, so in case the bubble pops, they will not be affected, and they are reasonably priced right now. MasterCard is of very good value right now. Visa, very good value right now. Actually, they are good buys. I cannot recommend you to buy or to sell, but I can tell you that I am thinking of increasing meaningfully my position in MasterCard. This is the best I can say publicly. This is the best I can say. So yes, MasterCard is an extremely well-run business. That is a great defensive play. They will do well regardless of the market environment, and they will not crash and burn, which is the goal of a defensive play, right? So Visa and MasterCard, these are the same companies. You have a few differences, but I'm seeing them as a basket of stocks, a duopoly that is great and that will not crash and burn. Next point is a specific company that gets no attention on YouTube. Maybe I'm the only YouTuber talking about this company. I'm a shareholder. I own Gravity. I've owned Gravity for a while as a defensive play. It's a value investment because Gravity is a company that you can get for free. That could be a good title of a YouTube video, right? Gravity is a Korean company that is only listed in the US, which provides not a lot of liquidity and a lot of misunderstanding. It's a company in Korea that is small. The market cap is $400 million. And let me check on Growth Focus. They create mobile games. This is it. This is the end of the business model. And the market cap, as you can see here, is $400 million. But they have more than $400 million in cash in their balance sheet, which means the enterprise value is negative. And if 100% of your market cap is in cash, you are still profitable. That means the company is selling for free. And this has been a value play for a while because the company is in Korea and they do nothing with the cash. So no dividends, no buybacks. But now things are moving in Korea. The government is kind of forcing companies to reward shareholders, similarly to Japan. At the same time, there is an activist for Gung Ho Online Entertainment, which owns 60% of Gravity. So the mother company of Gravity has an activist, and the activist wants to unlock shareholder values with more dividends and buybacks. So Gravity is a company that I consider defensive because it is trading at cash. And you have a good risk-reward opportunities because the upside is immense. What if they announce something, right? Every time the stock was trading at cash, it was the absolute bottom. I can show you what I mean so you understand very clearly. I can show you the cash over time, and I can show you the market cap over time. Market cap, no. View as percentage, no. How can I show you this and this? Since 2017. Okay, that can work. Or maybe I can do even better. It will be even better on FinChat, on Fiscal.ai. By the way, I'm navigating between Stock Unlock and Fiscal.ai. You see me every video talking about these websites because I'm using these websites every day. So I cannot recommend these websites enough. And if you want to use them, you have discount codes in my description. Literally click on them. It will be cheaper for you. So for Gravity, I want to check the cash pile over time, growing, right, up and to the right. And I want to see the market cap. Market cap. You can see, and everything will work since 2017. Can I check this? I can check this. These two lines. You see in orange the market cap that follows the stock price, right? Up, down, up, down, up, down. And you see the cash pile in blue, up and to the right. Every time the stock traded at cash, it was the bottom. It happened during COVID, March 2020, trading at cash, it was the bottom. It worked in December 2022, the stock was trading at cash, and the cash acted as a support for the stock. It rebounded. Same thing for September 2024. Same thing for March 2025. Every time the stock was trading at cash, it rebounded. Look at this. Rebound, rebound, rebound. And now here we are. So yeah, 19th of November 2025. We are trading just below cash. What do you think will happen? Be my guest. Be my guess. If I had to guess, I would say a rebound. Every time it had rebounded since 2017. So almost a decade of rebounds if the theory is correct. The investment case is very simple here. Okay? So that was a defensive play, trading at cash, not correlated at all with AI, with CapEx, with the US economy at all. They do mobile games globally. It's a Korean company, trading at cash. The very defensive play. Next point, I want to go back to the US. I will talk about AutoZone. AutoZone is a company that is very profitable, that is growing meaningfully. The management is smart enough to do buybacks every year. And every time you had a stock market correction, AutoZone was going in the opposite direction, which means if you have a tech crackdown, a tech crash, as we had in 2022, AutoZone goes in the other direction. AutoZone goes up. Look at this. This is for 2022. In green, you have AutoZone stock price. In gray, you have the S&P 500. When all the tech companies went down, stocks went down 20%, AutoZone went up 20%. Okay? And you will have the same phenomenon happening for this year. During the market drama of tariffs, everything dropped 20%. AutoZone was flat. It's a defensive play. When you have panic in the market, AutoZone is a wonderful defensive play. And now, you have a reversal trend happening right now. Tech stocks are dropping. AutoZone is going up. So yeah, I believe AutoZone is a good defensive play, and I can put O'Reilly in the same category. These are two defensive plays that are operating in the auto parts industry. So very boring. And they act as contrarian indicators. Every time you have panic in tech, these stocks go up because you have a reverse correlation. It's something about the index. These businesses are fine. They reported earnings recently, already reported earnings recently. They have upgraded their guidance. They will grow as usual. They will have more locations as usual, more revenue, more earnings, more cash flows. They play around with inventory, but this is fine. And they are doing buybacks every year. So I believe AutoZone and O'Reilly are good defensive plays. I believe if you fill your portfolio with some of these plays, Berkshire Hathaway or Gravity or AutoZone, you can have a pretty good defensive defensive basket. You can choose to invest in several companies that are defensive, like Visa, O'Reilly, Berkshire Hathaway. Now you can do the due diligence and select what is best for you. But I believe these are my favorite defensive plays in case you have a market crash, in case you have a market correction, in case tech stocks go down. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.